Well, hello everyone. Welcome to today's market recap. We're going to be taking a look at what has happened in the markets over the previous week. Today, I'm joined with Bruno Perinelli and Ben Sparham. Unfortunately, Ben is having some technical issues, so if he's able to, he'll join a little bit later. So starting off with you, Bruno, how are you doing this week? Viewers, please let us know if you can see us, if you can hear us properly. So Bruno, how are you doing?
Hi Oliver, hi everyone. I'm doing good. It's always a pleasure to be here with you guys.
Wonderful. So Bruno, starting off with you, this week we have seen much weaker housing data than was expected, with a large drop in building permits. Now, how could that potentially affect the US economy and the US dollar in particular?
Personally, I think the housing data is more like a light indicator of what has already happened. Um, Not that much. We can't forecast looking at it um, as we do with other indicators such as the confidence, consumer confidence, or the GDP, because this week on Wednesday, the consumer confidence came in above expectations. It was I think, the 10-month high, and the GDP also came in above expectations about after
Correct.
the
That is
second
something I want to touch
revision.
up on a little bit later. We're going to get to the GDP growth numbers. But in general,
Yeah.
how does the housing data tend to impact the US market?
Well, it kind of released some recession fears as for some some recession fears are going to be growing as the effects of the aggressive monetary policies of the central banks are going to be taking place. And if there are some indicators, some bad indicators coming in that that kind of like grow the recession fears and make some indicators to go out of risk assets and to choose more stable assets. So such as let's say the US dollar or say short yield bonds and so on.
Completely understand. Thank you. In case why you're wondering, or in case if your viewers wondering why I have the Lux UK flag under me, it's because this screen is made for Ben and Bruno, and as Ben is still having some technical issues, I'm quickly filling into his shoes. Continuing in the meantime, Bruno, this week, or one of the main events of this week was also the decision of the Bank of Japan to widen the 10-year bond yield range. Now, how is that going to affect the Japanese yen moving forward?
You know, what the Bank of Japan did was to widen the 10-year bond yield range. For the ones that don't know, the Bank of Japan is control the bond yield curve. That means that it intervenes the bond markets so that the demand for yen, it can control the demand for the yen and boost the Japanese economy. What it did concretely was that it widened the 10-year bond yield range up to 50 basic points. That steepens the bond yield curve, and that enhances the demand for the yen, because what the central bank does is to sell bonds and demand Japanese yens, and at the same time as it steepens the yield curve that encourages the investors to go to long-term projects, to long-term economic projects, and that could forecast higher GDP than expected in Japan. So that's why the Japanese yen um, was appreciated, and we got the dollar yen going from 135, 136 yens per dollar to 132, and I think it can go even lower next week and go down to 129, 130.
Thank you. So traders should be watching out those levels in the US dollar Japanese yen currency pair. Now, another thing that we've already touched up on and I want to get a little more into is the GDP numbers in the US. We saw that the GDP numbers came out a bit higher than expected. How is that gonna affect, or what does that mean for the US market in the upcoming week and also forecasting towards the start of the new year?
Well, at first, the first reaction of the market after this news was to, wake up some yields, some rate fears that the Federal Reserve might lift the interest rate more than expected. But I think on the long term, we're going to see that the a higher than expected GDP is going to have good effects on risk assets. And I think the Federal Reserve have to focus more on how the inflation goes down instead of the GDP numbers, and how that affects the prices in the end. I mean, if the prices still go down and the GDP goes up, then that's the perfect world for the Federal Reserve. Um, and I think that could generate a move from, let's say, safe haven assets in the end, in the long term, to risk assets.
Wonderful. And sort of the last thing I want to maybe discuss with you a little bit is that we have the holiday weeks coming. Now, we know that the volatility in the markets is lower than usual. We know that there are things that traders need to be aware of. Do you personally recommend traders trading during the holiday period? What are you going to be doing?
I think what traders should do now is to have a rest, to not to focus too much on the markets. It's going to be a lot of holidays across the world, in the United States, in the UK, in Europe also. So I think you should take a rest and prepare for a new year and start off again on the right foot on January the 2nd.
I completely agree. I think that during the main holidays, there is simply too many ways to lose and too few to actually win, I think. So personally, I would also be recommending to all of our traders that you are taking a break during the holidays. You know, it is important. We all work hard all year, so it is important to actually take some break, spend some time with family, clear your head of trading. And I think then returning on the 2nd of January, as you mentioned, after all of the holidays, the markets are slowly going to be returning to normal. Uh, my very last question is, where do you see the economy heading in the start of the year?
The worldwide economy, you
Correct.
mean? Okay. So, as I mentioned before, I think the central bank's policies are going to be taking place next year. So, we could expect lower GDP growth. Um, across the world because their main central banks, I mean, the Federal Reserve, the Bank of England, the European central banks, are tightening its monetary policy, not as much as the Bank of Japan is not that into the tightening its monetary policy. On the contrary, it's isn't it? But at the same time, I think these expectations just kind of like enhance the forecast that the worldwide economy is going to be worse in 2023. So some investors may have some, may not take too much risk now and expect to see what happens, and that's what not only takes us to a recession or to a slowing growth.
Okay, thank you very much for all of the insights today. Unfortunately, Ben wasn't able to join us. And lastly, on a little bit of an unrelated note, I wanted to tease for you who are watching some of the news that we're preparing for you in the upcoming year here at Lux. So now, traders, as you know, we've been talking about this for quite a while. We are working on a new live trading room where you're gonna be able to follow Bruno and the rest of our mentors each day. Apologize. So that live room is gonna be launching on 2nd of January. You can already basically pre-purchase it and get ready to start following the mentors as soon as 2nd of January. Also, for you don't have to be a member of the elite package anymore to follow our mentors, and on top of that, you are going to be able to book meetings with them. So if you want to spend some one-on-one time with Bruno, head over to luxtrainingfirm.com and you're going to be able to find a section where you can book a meeting with our analysts, with our mentors, and you can get them to yourself for an hour. So, thank you for your time today, Bruno.
Thank you, Oliver. Have everyone a great holiday season and see you
Uh,
on 2023. Happy New Year.
Thank you. And once again, thank you, viewers, for watching. And we wish you all Merry Holidays and a Happy New Year. Thank you for your support in this one. And we'll see you again with our next live stream after the new year starts. Have a great one.